So then we're actually going to find which tickers make the most viable catapult candidates, right? So I'm going to go into specifics of, hey, why would you want to trade this underlying? So earlier, people were actually asking about, which underlying should we possibly trade? I'm going to get into that. Okay. It's actually one of the reasons when I talk about like my watch list. Okay. What's on my watch list over here? This watch list is for a reason. When I'm looking at stuff like a Broadcom, okay, they're big name stocks, everybody knows, okay, but I'm going to get into specifics of why we find these trades, why we put them on. Now, before we get too deep into this, and it's really important you guys understand this before we get too deep, okay, I don't want anybody to get caught up because, and I'm reading the chat at the exact same time, right? I don't want anybody to get caught up. People talk about things like margin, okay, $2,000 will suffice. I want to make that clear, okay? $2,000 will suffice. There's no need being tied to a computer or phone. Look, okay, when you want to trade, you can execute, but this is not, I want to make this clear, this is not a strategy where we sit and we wait. In fact, when you looked back at some of the trades that I did, okay, some of the opening and closing of these trades, like, look, here's, Starbucks, okay, there's Starbucks, and you can see I closed this trade on 522. It was opened about 3 weeks earlier than that. So we're not like banging away at the keyboard constantly for these trades. I don't want you to feel, that constant stress of like, I got to watch, I got to get in, okay? The MACD met the Fibonacci and it crossed over. That's not what this is about. These can be executed for the convenience of any mobile device. So you don't have to be tied to the phone, okay? But you can definitely trade off of it. And that's important, okay? Trades are going to have minimal risk and minimal margin. That's why I wanted to start with and say like, oh, $2,000. People are like, what can I do, okay? And you do not need significant experience. Look, we can have people up and running from zero to your first trade, but it does take a few hours. Is that okay with everybody? Okay, I wanted to get into that a little bit over here. Yes, this is being recorded. The Magnificent One, I like that. Instead of the Magnificent Seven, we're down to the Magnificent One. Okay, so I'm going to give you guys the nickel tour. This is me. Again, my name is Don Kaufman. If you ever need to get a hold of me, okay, just go to support@stxoptions.com. Put my name in the subject, goes directly to me. Okay, so I want everybody to know right up front, you can always email me. Okay, I answer emails. I answer emails for 3 to 4 hours every single day. I just sit inside, iPad. That's part of what we do over here. Anyway, here's a little bit about me. I watched order flow for 15 years, and that has actually given me a pretty unique skill set. When I say I watched order flow, some people have no idea what that means. First and foremost, I grew up in this business. I know that everybody always has a story like, how'd you get involved in the business, man? Okay. I grew up in it. I had family that actually traded on the floor in Chicago. As young as, I don't know, 6 or 7 years old, I was already going to the trading floor, Chicago Board Options Exchange, as a little kid. Like we would go down there, even when the market was open. Anybody know this? But the day after Thanksgiving, which was a Friday, always a Friday, like Black Friday, was always a half a trading session. It was also bring your kid to the trading floor day. And I have been going down to the trading floor since I'm about 7 years old. Met a lot of traders right out of college, literally right out of college. I got out of school in the late 90s. I went and traded in Chicago. I was down there for about 2 years, and I had met a couple of traders. One of them was Tom Sosnoff. The other one was Scott Sheridan. And Tom and Scott actually approached me on the side. Like I'm literally, walking out of the Chicago Board Options Exchange. They approached me on the side. They said, hey, you're young. Okay. By the way, I really didn't know these guys well. They just like approached me. They're like, we're starting a startup brokerage firm, and we'd like you to come with us. Okay. And I'm like, sounds good to me. I was 24 years old. When somebody says startup and you're 24 years old, you're like, all right, let's do this. No idea what it did. They actually, at the time, they gave me a $7 million budget to a 24-year-old. And they said, you're going to run the education division of a company called Thinkorswim. And like, Thinker, what the hell does that even mean? Anyway, I went on to build the entire education division of Thinkorswim. I was on the executive team. We took the company public in 2007. People always ask, how'd you do in it? It's pretty good. It was a $600 million deal. $600 million used to be a lot, people. Back in the day, that was a lot. Anyway, I was there in 2007. We took the company public. I then was there, of course, when TD Ameritrade purchased us in 2009. In 2010, I signed a 5-year deal with TD Ameritrade. I went on to actually run education for TD Ameritrade's 7 million clients. And the last, organization, I had 768 people that were actually in the organization. The reason I mentioned that is we got to see everything that you did. That's how we built education for TD Ameritrade. We watched everybody's order flow and we studied everybody's order flow. And when I say studied it, like if you're like, oh, I was a trader then and I did an iron condor, I knew exactly if you were going to make money and lose money. I traded futures contracts. I did covered calls. We knew everything. We knew exactly what worked and what didn't. And the problem, though, was all the regulations at the time. They wouldn't allow us to exploit the data that we were mining. So what happened? A bunch of us got together in 2015. Okay. My contract ended. I say, I'm out of the contest. I left. TD Ameritrade. We launched both Theo Trade and, of course, STX options. And here we are since roughly 2016. Okay, we have built our own education. And by the way, at this firm, we have many of the people, of course, from the original Thinkorswim and TD Ameritrade group, including Brendan Chapman and Corey, Rosenblum, and of course Blake Young, and of course Jeff Bierman. Jeff Bierman helped build the Thinkorswim charts. Anyway, that's a little bit about my background, but a lot of what you're going to learn today comes from having watched billions and others' mistakes. This is actually TD Ameritrade TV. It's also the last time I was in Chicago. I still do what's now, Charles Schwab TV on a weekly basis. This is actually a hit that I did specifically on CNBC. I just put it in there because it's the most memorable. I don't pit anybody against Kevin O'Leary. Okay. And I schooled him that day. This is actually, we took the cover of Investors Business Daily. For those of you who don't know IBD, this is actually the cover. And this was actually after the market was tanking. In 22, it was actually the best year I had since the financial crisis. Now, how our members are doing, okay? This is a place with a comprehensive set of resources to study and exceptional instructors, beginning with Don Kaufman. I have a PhD in quantitative economics. I learned more about the markets and the economy from listening to Don K when the Fed spoke than from my graduate studies. All the instructors offer unique seasoned trading and analysis. And the chat with other members is exceptional. Lots of shared wisdom there. You can go as deep as you want or stay as close to the shore in the shallows. Your choice. All right, let's multiple years. Theo Trade. Look, get down to business, start to trade here. Market chaos has arrived. I don't like to use the term volatility. You want to know why I don't like to use the term volatility? Whenever I say these markets are volatile, people go, well, VIX is only 12, man. Okay. Yeah, the VIX might only be 12. Okay. But you got to understand what you're seeing. You're seeing markets run higher. It's upside risk. Tech and AI has completely become the marketplace. That's an understatement. Okay. And by the way, that trade right now is sketchy. It's just sketchy out there. We're in an election year. That's going to heat up after what? Tomorrow? By the way, I don't want to watch the debate tomorrow, but I kind of want to watch it. It's like a prize fight, like a little bit. Okay. I think it's more entertainment. I think I've watched everything on Netflix and now I'm ready to watch, something else. The Fed is still completely undecided on rates and inflation. Speaking of which, the main event this week, okay, we have PCE data coming out on Friday morning. Ooh-wee. Strong dollar. That's an understatement. High interest rates. Interest rates are still soaring. Geopolitical risks. I ain't got a clue. That's what I call market chaos. And at the same time, I say game on. Embrace the chaos. Look, to be successful in this marketplace, plain and simple, okay, embrace some of that chaos, embrace some of the volatility. Try not to rely exclusively on directional bias. People have a really tough time with that. This has been a very one-sided marketplace. That is okay, but you're going to have to learn. You got to be able to be wrong and not lose money, okay? Can be wrong and not lose money. You're going to need a strategy that can be wrong and not lose money. It's one of the primary reasons I've been talking incessantly about catapults. Can your strategy do this? Okay, so let's start to break down a little bit about what this catapult happens to be. Okay, what I like to do as a trader, okay, is take some shots, be wrong, not lose money. All right, I like to take some shots. When I say some shots, well, something in NVIDIA, Amazon, Apple, Google, Tesla. Can you take a shot in those products? All right. Be wrong and not lose money. And these are, I'm not trying to be facetious. I'm dead serious. What I'm about to show you, okay, is exactly that. Catapult can do just that. Now, I want to give you, excuse me, background to and the genesis, if you will, of the catapult trade. Before I actually start writing details down of how to actually enter the trade, what is critically important, okay? What is critically important to go time out. I want you to understand the approach. Why are we doing this? First of all, there's a term that I'm going to use. Okay, there's a term that we sent out in emails to you as well, and that was this. It's called moonshot. What's a moonshot? What's a moonshot to you? Okay, to me, it's taking that shot. It's like an outside chance out there. As a trader, I have to get it out of my system. Okay, I like to take directional shots. I like to look at stuff like NVIDIA and say, you know what? You can't fight it. Might as well join it. Let's take a shot in NVIDIA. Let's take a shot in Google. I'm going to show you a trade in Google in just a moment where I took a shot. Okay. Really paid off too. I want significant returns from minimal risk. Okay. But the problem that I have, and it is a problem, like mentally, when I take a shot, when I'm saying taking a shot, let me really dig deeper into that. Let's go out and buy a trade. We're going to risk $1. If we're right, we're going to make up like $4 off of that. Does that quantify what a shot is? Or I'm literally saying like, hey, look, okay, this is the trade I'm going to do. It doesn't matter what instruments I use. Okay, the trade I'm going to do, I'm going to go out and I'm going to risk $1 to be able to make 4. That's kind of what a moonshot happens to be. And I'm very frank in saying like, I like to do that stuff. Okay. People are out there and they're they're often trying to pick up nickels and dimes in front of a bulldozer. You know, trying to get in, out, in, out, in, out, in, out. Oh, I'm super fast. Oh, I got in this trade. I got out of that trade. It's not a moonshot. A moonshot is I put on a position, okay, and I sit there and I go, I hope, I hope, I hope. Maybe it works, maybe it doesn't. But I'm going to tell you right now, me mentally, I have to finance those moonshots. I don't like to go out there and risk $1 to be able to make 4 and risk $1 to be able to make 4, because what's going to happen is I'm going to risk $1, I'm going to lose that $1. Then I'm going to go out there to the next time and I'm going to risk $1 and I'm going to lose that $1. Okay. And on the third time I risk $1 and boom, it's a home run. Okay. Mentally, I don't like losing the $1. So I need to finance those. Enter the catapult. Okay. We want to take a shot. Okay. And use what I term house money. Remember, when I say take a shot, what am I really saying? Moonshot. Okay. I want to take a shot and I want to use house money. Okay. Take a trade in Meta, but do it with nominal risk. Tesla, it's like a risky wild child, by the way. Okay. And as I said, I go no holds barred on everything here. Oh, look. Okay. You know what that is? That's a Tesla trade. I just put it on. The thing's already up 30%. I literally just put it on. Here's another Google trade. By the way, one of the Google trades I closed, another one I left open. It's up 64%. Okay. NVIDIA trade though, the NVIDIA trade's only up 9%. Okay. I have 3 different catapults right in front of you right now. All 3 are actually up. Okay. Tesla is a risky wild child. Catapult though can make that trade and cover the cost. Meaning like I can trade Tesla and cover the cost. NVIDIA is a bag full of risk. NVIDIA is going to work until it doesn't. And when it doesn't though, that's okay. That's okay, because Catapult can offset any upfront costs. And that's exactly what we're going to be getting to, right? So what are Catapult trades? You want to be able to trade NVIDIA, but you're afraid of the risk? You should be, okay? I don't mind saying that either. You know, what if you could 100% finance your NVIDIA trade and give you that free shot in this high flying stock? Again, enter the Catapult. So what we got to do, okay, is learning to catapult your trade. When I say learning to catapult, it's just like it sounds. It's like lobbing, okay, these trades. Catapult comes down to this combo trade. When I say combo, I mean combination trade, right? We're going to buy a trade. For instance, in NVIDIA, we're going to buy a trade in NVIDIA, okay, while financing it with an ultra high probability trade. What's an ultra high probability trade? The probability of success in the ultra high probability trade is going to be about 97.5%. Okay. These two trades. So one of these trades, I'm buying something in NVIDIA. The other trade, I'm financing my NVIDIA trade. The two trades have one end goal. You receive a trade, okay, with minimal risk that is often just a pure free ride in the marketplace. And that's what's so important, okay? The goal here is you can put trades on, and again, take the shot that you want to take. How many people here are thinking bullish still in NVIDIA? I'm serious, okay? Come on, we got a ton of people in the room right now. How many people here bullish in NVIDIA? Yes or no? Just yes or no. You bullish in NVIDIA? Yes or no? You tell me. All right. Let's make sure. All right. So how many people here bullish in NVIDIA? Okay. All right. It's I would say right now a 70-30 market in here. Okay. By the way, this is what makes a market. There's no right or wrong in here. I want to be clear about it. There's no right or wrong. I don't care. Like, okay, look. I like no idea. Strong gets stronger. Okay. Yeah, but all right, this is good. It's probably 70-30 market that's bullish. So that's fine. You want to get bullish in NVIDIA. But you should be sitting there, okay, thinking to yourself, like, look, things in the last just 4 trading sessions in NVIDIA, okay, they got real. They got real. And you can still get bullish in there. And by the way, when I say you can still get bullish in there, I got the bullish trade on. I'm not going to hesitate to say, like, that's the account. Okay. This is Catapult. And I've got the trade on. But I'm going to tell you also, I'm not paying for it. I ain't going to pay for it. Okay. Because then it's just at that point, it's a gamble. It's a complete gamble. And that's not what I'm going to do. Okay. What I'm going to do, okay, is I'm going to approach this and identify it. Look, let's identify 3 steps to catapult the profits. We're going to identify a ticker. We're going to trade with house money. We're going to execute the catapult. I'm going to explain exactly when I say we're going to identify a ticker. Okay. What am I really saying? We're going to find what you want to catapult into. Okay. I was mentioning a little bit about Google. So we could look at something like Google. We could look at something like Google and you go, but why Google? I thought we were talking about NVIDIA. Don't worry, we'll get there, right? So we could look at something like a Google. So let's go cruise over and go, let's go look at Google. Google. So one of the reasons that, okay, I really like Google, somebody actually hit upon it earlier, strong gets stronger. What you're looking at right now, okay, is my expected move indicator. My expected move indicator has displayed in here. There's an incredible amount of consolidation. Okay. This people, upper edge of the expected move, upper edge of the expected move, it's a breakout. Okay. If you're of the opinion the strong gets stronger, then that is the driver of the marketplace right now. Okay. Lo and behold, we didn't have to wait, okay, for this second week. We put the trade on. It's already up almost 70%. Okay. Why did we do that? It's got 51 days left. My trade's got 51 days left. It's already up 71%. Why do we do it? Wild consolidation. Okay. Wild consolidation was actually displayed exclusively and explicitly by using the expected move indicator. I got to tell you, okay, that's identifying a ticker. Now I can go through, 10 different examples in here, and we will. We'll go example after example after example, because I'm going to show you trades that I put on, trades that I currently have on. Okay. By the way, I don't know if Google's going to be a winner. I just took off a Google trade and literally put another one back on. I had one that was profitable, closed it. Okay. Put on a new trade. Okay. Going with it. So identify the ticker. Next, I have to go to trade with house money. And I'm going to get more into that. And then execution of this. Execution. This is like literally step 1, step 2. Identify the ticker. I have to figure out the Google trade, learn to trade with house money, and then we're going to execute upon it. So in step 1, identifying the ticker. Okay, this is precisely why I'm providing my watch list. Trade what moves the markets. So trade what moves the markets. What moves the markets? Google's moving markets, NVIDIA's moving markets, Microsoft's moving markets, Apple's moving markets. Okay, trade the most liquid stocks and ETFs. Ironically, okay, I've done quite a number of trades in stuff like QQQ. Right? Why not? Trade what moves the market. Okay, you go, well, why are you trading the QQQ? Oh, I got news for you. Maybe, okay, maybe I don't want to be dealing with something like Google. Okay, maybe I realize that the NASDAQ is the marketplace and the NASDAQ's up some 19% year-to-date basis. Trade, people, what moves the markets? And I say use a proprietary expected move indicator. Okay, that just simplifies everything into one, okay, composite indicator in there. Now, that's step number one, which I've gone into some detail on here, right? And of course, everybody's like, well, you're going to be bullish, you're going to be bearish. Obviously, in many of the trades I've done as of late, okay, I'm bullish, I'm bullish, I'm bullish. Because what did I say? Trade what moves the markets. What are the markets doing right now? Going higher. They're going higher. So I'm going to trade, okay, what is the driver of that marketplace? And look, there's no if, in, or but about that. NVIDIA is a driver to the marketplace. In fact, when I say there's no if, in, or but about that, what drives the marketplace? Let me guess. Is it Google? Is it NVIDIA? I just put a trade on Tesla. I just put a trade on Tesla. And you go, why Tesla? It hasn't been really moving markets. Yeah, except all of a sudden, bam, forgot that little monkey. That thing is up $7, up 4% today. How did you know? Because it consolidated. And we're going to show that. Now, step number two. Now, I'm going to spend a moment on this. So this is our moonshot. This is taking the shot in something like Tesla, in Google, in NVIDIA. Here's step two, trade with house money. Taking a moonshot, okay, isn't the gambling portion, all right? It's not gambling. Use the catapult to finance your trades with house money, okay? Do not gamble or roll the dice with out-of-pocket costs. So even though I call it house money, house money, it is a gambling term. And then I turn around and go, but it's not gambling. Okay. So how do we finance trades? How are we going to go about financing trades? Well, we find the highest probability trades, 95% plus probability of making money. They actually have about a 97.5 probability though, okay, of making, all right, what we need to finance the trade. So we're going to find extraordinarily high probability trades, and then we're going to finance our other trades. And again, I'll show you in just a moment. In step three, okay, execute. What we're going to be doing is buying one trade, like buying the Google trade. That's the moonshot trade, okay, and sell the other trade that is over a 95% probability, okay? The trade we're buying is fully financed by the trade we're selling, okay? So you're buying with one hand, selling with the other, okay? It's a total offset in there. All right, now we're getting places, finally. Moonshots are fully financed. You're going to be able to trade what you want because what's the worst that can happen? And I actually really do want to ask that question. What is the worst that can happen to you if your trade is fully financed? Anybody? What's the worst that can happen to you? You strike out. Okay. Strike out, step up to the plate again. Oh, you've had trades go bad. But now when a trade goes bad, you're not going to have to pay for it. No fear. Catapult again. Catapult again. Have I had losing trades? Well, my losing trade, okay, is a wash. Somebody always says, what about commissions? You pay them, okay? You pay them and you gladly pay them because I'm out there like buying one position and offsetting it by a sale, okay? Okay. And you're looking at this and you're like, never thought of that, okay? How many people lately, serious, how many people lately have heard of a term called dispersion? How many people have actually heard of that term dispersion? Just a yes or no. Y for yes, N for no. How many people have actually heard the term dispersion? Anybody? Okay. It's been all over the news lately. Okay. It has been all over the news lately. And if you've never heard it, that's okay, because people are going to look it up. The dispersion trade. Okay. This is actually a version of it. It's what I would call the client friendly. You're a retail client. I'm a retail client. It's a retail client version of it. This is a trade I've done, 25 years ago in Chicago. We would do dispersion trades. Dispersion trades are nothing new, okay? But to actually take it to the retail level, what dispersion trades do is they sell in one product to buy in another, okay? And they drive wild feedback loops. NVIDIA, okay, is the dispersion trade. It's really kind of cool, all right? By the way, we're not going to end up owning any stock in here. You don't have to worry about any of that, okay? But the important point is, even if you're wrong, all right, have no fear, catapult again. Let's start to go through some examples. Then I'm going to get into some more detail, some more meat about this, right? Here's an example. Now, the example, all right, I was bringing this up earlier. I filled this one yesterday. To be fair, I took the screenshot yesterday, but I filled this. I literally put this on May 8th. Okay, filled it yesterday. What this shot was, it returned 83%. Okay, but I went out, right, and I could have possibly made more in this, but I felt, I'm running a little bit short on time. You're like, well, you had all the way to July 19th and you closed it on, June 25th, because that was the right thing to do. And then I reopened another one. But in this particular trade, all I've actually done is I put on this trade, took off this trade, okay, fully financed. Now, the way I'm showing it to you, the way I'm showing you the trade, you made 83%, but that's 83% on a debit. I didn't actually even pay for the trade. I didn't pay the $2.28 for the trade. People always say, how many contracts? Do one contract, do 10 contracts. One contract's $228. 10 contracts, $2,280. That trade, though, is going to be fully financed. So the return on the spread over here is infinitely high. Okay. Now, what does it cost to trade Google? What does it cost? Okay. As I said a moment ago, it costs $228. What if we could do it for free? Trade the Google trade for free. Now, here's the key, and why I wanted to bring up the Google, example, not just because I closed it yesterday. Now, it's 83%. Push it aside. It's all about trading it for free. It's about finding house money to finance my trades. This trade has a 95% probability of profit. Okay, it's going to offset volatility risks, offsets directional risk. IRAs can trade these products. By the way, please, people are always like, I have an IRA, and that's okay. That's okay. In fact, one of the accounts that I'm trading in right now is the IRA. Okay. And this doesn't violate any day trading margin regulations. Okay. You can have in a regular account, you can have as little as $2,000 in your account and be able to do this. Okay. And I say the perfect trading world, it exists. Okay. Welcome to the micro E-mini S&P 500 options on futures. Now, time out. People hear that and they go, I'm going a micro E-mini S&P 500. I don't know what that is. Okay. So we have a partnership with the CME group. I say partnership. Okay. We actually do education with the Chicago Mercantile Exchange. And the CME group, Chicago Mercantile Exchange, created the micro S&P 500 for retail traders just like yourself. Okay. This is your tool to finance other trades. Now, some people have never heard of this. I want to bring it up, and I'm not bringing it up to intimidate you. Okay. I want you to know it's /MES. Okay. And you go, oh, /MES. What does that mean? First of all, some people are like, oh, it's a futures contract. Okay. Actually, it's an option on a futures contract. I want to put that up there. It's an option on a future. And you go, before you start foaming at the mouth, how many people here have heard of a product called SPY? Spiders. How many people here have heard of spiders? Me. Guys heard of spiders? Okay. Do you know what the /MES is? Okay. You're going to love this. It's the S&P 500. The SPY is the S&P 500. What's the MES? It's the S&P 500. And somebody goes, I know a product called the SPX. Yes, that's the S&P 500. I know a product called the ES. Yes, that's the S&P 500. What have we learned? There's a lot of ways to trade the S&P 500. Okay, but the reason we're looking at the MES, it doesn't tie up margin really. It's the most friendly product you're ever going to trade. It's more friendly than the spiders. Okay, the spiders are one of the most prolific products in the entire marketplace. And I say that without hesitation or unequivocation. When I say that the spiders are the most friendly product in the world, okay, and they really are. They are the most liquid, okay, product in the whole world. Bear with me on this. Why do I say that? You need only look how much they trade. Okay, the spiders today have already done 4 million contracts. We're not going to trade spiders. We're going to trade the MES. Want to know why? Because you could do things in the MES that you can't do in the spiders. It's your tool. You're being the retail. The Chicago Mercantile Exchange wanted to come up with a product, not just to rival the spiders, okay, but a tradable vehicle, okay, that would be better than the spiders for you, okay? And it is spectacular. And a lot of it, okay, has to do with, well, first of all, maybe you know nothing about those micros. They're micro options on futures. That's okay for today's session. We selected these micros because it can accommodate all types of traders. Okay. Micros can be traded in very, very small accounts. Micros can be traded in retirement accounts. Yes, you can trade them in retirement accounts, and that's important. Okay. Before anybody freaks out about that, anybody and everybody, we selected this product because it is retail friendly. We selected this product. This is what the Chicago Mercantile Exchange wanted. They wanted an entry level vehicle to give, okay, the retail trader the same opportunity to do trades, okay, as professionals did without having to tie up tens of millions of dollars. Like people, oh, this dispersion trade. And okay, you got to forget all that garbage. You have to tie up tons of money. Look, example. Here's how the catapult works. Let's say we're bullish on Google because we use our expected move analysis, right? Let's go back over here to Google. And I was actually already showing this. So this is second shot through. Here's Google. Okay. I actually want to show you something really interesting. My original trade in Google was back here. Okay. Broke to the upside. We consolidated, broke to the upside again. I have a new trade right now on Google. I am catapulting in Google. Why? Because it consolidated. It was a perfect time to do that. Now, we financed our Google trade, okay, via MES, which I'm going to explain in a moment. And then we executed the trade. Let's sketch out all the details and then take a look at the Google trade, okay? Look, let's catapult our way to profits. The first thing I'm going to do before I get into the Google trade specifically and explicitly, okay, let's just talk about this. What is this? It's a distribution curve. Okay. Everybody's seen one of these, right? Like a distribution curve. Yeah, you fit in the meat of the curve, right? Look, all I'm showing you is this is a stock. By the way, every here, I'm going to use my little right on board over here. Every fictitious stock, let's make this a fictitious stock. Every fictitious stock I like to call stock. Okay. So this stock is called stock. And stock, what can stock do? Stock can go up to 110, stock can go down to 90. Stock can go up to 120, stock can go down to 80. It's just a distribution. Does that make sense to everybody? Okay. Does that make sense to everybody? All right. By the way, Jim was saying there's margin on there would be a lot. Jim, okay, you got the wrong brokerage account, buddy. Margin on these things is like $600-700. Good. It is good. So stock, okay. Now your stock in here can go up to 110, down to 90, up to 120, down to 80. That's great. All I'm showing you is that a marketplace can go higher and a marketplace can go lower. But let's assume, okay, that this stock wasn't just stock. We could assume that this is actually Google, right? What do I actually do? What are the 3 steps to getting into this? Step 1, okay, was identify the ticker, right? Identify the ticker. And identifying the ticker, we're going to use Google. And for Google, I'm actually going to put on the ticker is the moonshot. Okay. So I'm going to put on a moonshot trade in here. Okay. Number 2, what's number 2? House money. And then number 3, okay, execute, which is actually going to be the act of trading it. Let's put it all together. Right now, this stock is trading at $100. All right, this stock, let's say it's Google. I know Google's $183 stock. I'm not looking at it right now. I think it's about $183 stock. So let's say Google's about $183 stock, but whatever. This could be Google. It's $100 stock. Okay, we identify the ticker. It's going through a period of consolidation as per our expected move indicator. I'm going to place my moonshot right here. Okay, that's going to be, again, that's going to be my moonshot trade right in there. Okay, that's the moonshot on Google. Meanwhile, we're going to finance that. We're going to finance it. We're going to sell something way out here. We're going to sell something literally in the nosebleed section. Okay, why? Because it's going to finance this. All right, we're going to sell MES option. We're not going to sell the MES. We're going to sell an MES option. out of the money. So far out of the money, I can't even see it. It's only going to tie up very nominal amounts of margin. The most margin you can tie up on one of these things is maybe $1,000. Anybody and everybody can do this trade, even with a $2,000 account. Okay. Anybody and everybody can do this. All right. So you're going to be way out of the money. All right. So you are literally, like people say it's 2 standard deviations, actually a little over that. It's between 2.5 and 3 standard deviations, like about 2.5 deviations out of the money. So we're going to sell an MES option. This trade out here is going to have approximately, okay, approximately, that's a large dot, a approximate 97% probability, okay, of success on it. So this trade is going to have a high probability. Why do we have this trade? To be able to finance the Google position. How do we execute it? Okay, execute the moonshot, execute the MES. They are 2 different trades. Okay, it's just a 1-2. It takes 2 seconds to be able to put this trade on. Now, what can happen to you in a position? What can happen to you? The market can sell off. If the market sells off, okay, right here, this 97% trade totally financed the Google shot, but the Google shot might go out worthless. You're like, still my heart. I didn't make money, but I also didn't pay for it. But I spent commissions. Okay. All right. Number 2, market stay totally flat. If the market stays totally flat, what happens? 97% goes out, worthless. This trade goes out worthless. We walk away from the trade. Lately, this marketplace has been hot. It has been volatile. It has been upside volatility. All of a sudden, where are you trading right now? Okay. Trading north of basically the 110. Okay. What happens in here? So you come up here to the 110, winner, winner, chicken dinner. And you go, oh my gosh, though, what happens if we continue to run? First, I want you to see how you made money on Google. You made money on Google because Google moved up. But at the same time that Google moved up, the entire market moved up. So the market moved up, but you still have a 97% probability of success in this trade. But even if the market kept moving up and up and up and up, you could actually take the Google trade, close it for money, reopen it, close it, reopen it, close it, reopen it, and actually be kind of leapfrogging the trade and making sequential profitability out of it. Okay, people, this is the trade you want to learn. It's a trade you want to learn. Now I'm actually going to go over, okay, specifically into a trade tab, and I'm going to open up options. Look at this. Okay, I'm going to open up options way out here, and I'm actually going to show you. Okay, look, there's a 3 lot on right there. You're like, what's a 3 lot? Okay, I've got a couple of contracts. Why? Because I've got a couple of trades. This trade right here, okay, is a magnificently high probability of success. And I just want to show you one contract, because somebody asked about, the margin a moment ago. One contract right there is my buying power. My buying power, okay, effect is $634.50 for one contract. Now, if I wanted to trade some size, and I don't mind saying, okay, I got some more size on here. I got a 3 lot here and a 3 lot here. If I wanted to trade some size, if I say size, I'm going to put on like 3 contracts. Now it's going to be $1,900 a margin. It will tie up $1,900, but a 3 contract trade, it's getting up there. Getting up there. You don't have to do a trade that big. You don't have to do that. Okay. Why do I do it? I choose what I want to do. But this, okay, is going to finance your trade. And I know it looks like a lot when I start, bringing this stuff up. The first couple of times I actually bring this up and 97% probability, the moonshot trade, okay, it looks like a lot. It's not. In the end, it's just Starbucks. It's just a Starbucks trade. Look, the genesis of my trade, just time out, okay? The genesis of my trade is, I just want to trade Starbucks, okay? Let me show you why. And I'm actually going to show you this trade. This trade was put on May 8th, okay? May 8th. First of all, okay, to see the trade itself, when you want to see a trade, well, you should probably go back to trading history, right? I'm in trading history. As I said, I take a no holds barred approach. I hate crap. People take screenshots and stuff. It's garbage. This is an account. It's activity. This is Tasty Trade. Okay, Tasty Trade, by the way, is built by the founders of Thinkorswim. So I trade both on Thinkorswim. I trade on Tasty Trade. Here's Starbucks. I paid 50 cents for it. Here's Starbucks. I exited it for $2. Okay, that's it. I opened it May 8th. I closed it on the 22nd. It's only a 3-week trade. But the question is, why? Why? Why Starbucks? Well, let's go over to Starbucks and let's use our expected move. Okay, why? Starbucks. Okay, so let's get into Starbucks. Starbucks got absolutely annihilated. Okay, nobody wanted to buy this thing. I'm going to tell you exactly why I bought it. Okay. Look what it did. The consolidation after earnings started upticking. Okay. This thing exploded higher last, just a couple of trading days. It's all about expected move. It's all about the expected move indicator. So in the expected move indicator, set up 300% return. Okay. Trade was totally and completely financed though by the ES. And you go, oh, how do you know it's going to be financed by the ES? Okay. Well, let me show you. See right here, this is the Starbucks trade. Okay, the Starbucks trade was executed at 11:55 a.m. on the date of question. On the day, okay, at 11:56, I executed in the MES. I executed in the MES. What did I execute in the MES? The 5,700 strike. And then I closed the 5,700 strike, okay, on the 22nd and closed the Starbucks trade, right? Just an open and closed case. Couldn't have been cleaner in here. Starbucks closed out of the contest. Next, we come to the QQQ and the Qs. This one's a little older. Okay. This was actually on April 23rd. On April 23rd, the trade only went off for like an 83% return. Okay. Trade went off for an 83% return, but what we were doing on April 23rd that actually sparked the genesis of this trade. Okay. So back, okay. Here we are. Once again, okay, there it is. There's the break to the upside, specifically of expected move. So we had a marketplace that was selling off. We smashed through the lower edge of an expected move. Okay. All of a sudden, the comeback above expected move, I'm like, here we go again. We're going. Okay. Markets actually displayed what? The marketplace was frothing to the upside and continued actually to rally quite considerably until ultimately I exited. Now, people look at this and they go, wow, you should have held the trade, for a longer period of time. Yeah, hindsight is always beautiful, isn't it? Okay. But the expected move not only got me in, but it also got me out. And that's one of the reasons I exited. Could I have held it longer? Yeah, I held it to May 16th. And again, in hindsight, I only held it to May 16th. The reason I actually held it to May 16th, which I knew is right here, we already broke outside of it, okay? And we started actually reversing. I'll show you, really zoom in, okay? Broke outside the expected move, and that's actually reversal. I didn't know we were going to higher after that, neither did you, okay? Bottom line is, got to use your expected move. One of the greatest indicators, all right, that we can use in this marketplace, period. Look, it's real and it's spectacular. Just take a look at the trade history. Again, the one thing I really am so adamant about, okay, when I say it's real and it's spectacular, look at the trade history. All of these trades, all right, are in here. By the way, some of these are still open, like the Google trade. There's a new Google trade. There's a new NVIDIA trade. Okay, this is a Microsoft trade that I just closed. Okay, here's an XLF trade that I just recently closed, but I just opened then a Tesla trade. This is a completely no holds barred approach. I want you to be able to see everything. Look, I'm actually scrolling all the way back to April, opening a Boeing trade, closing a Boeing trade, opened Boeing for $1.38, closed it for $2.65. All of this is actually based, okay? All of this is actually based on the expected move indicator. Here's the XLF trade, open for 76 cents, okay? And the XLF, I had to hold this one for a long time, okay? Closed eventually. I think that one actually closed in the XLF. I continue to scroll up in here. There it is, $1.15. Not exactly a home run, but still out and out profitably. Okay, people, that's looking at trade history. Look, this is why you want to be able to catapult the profits. Creates a dramatic opportunity, okay, with really, really limited risk. It's a dramatic opportunity with very, very limited risk. And uses house money to finance expected move trade setups. People get very, very hung up on this whole MES thing. This MES thing, okay, I'm going to tell you why we use it. It's a really, really small contract. It's minuscule. Somebody says, me bigger than that. Good. You're bigger than that? That's awesome. Step up and trade the ES. You trade the ES. I have plenty of positions on the ES too. Okay, plenty of positions in the ES. I predominantly place my positions in the ES though, okay, over here on Thinkorswim. So I've got positions in the ES as well. So I'm doing this in a multitude of different accounts as well. So you can actually trade a bigger product. But the reason we love the MES, because you can take somebody that has a $2,000 account, you can take somebody that has a $5,000 like IRA, and you can put them into a very, very safe dispersion type trade, okay, for a negligible amount of risk. Such a nominal amount of risk. You realize I'm selling the 60-50 calls. That's the 6,000, okay, 50 calls. That is in the nosebleed section, people. And I'm not trying to make a full like $12 on these. They're a very, very small contract. They tie up very, very nominal amounts of margin, and they create this phenomenal opportunity for you to be able to take that moonshot, right? You're never going to have to buy or sell stock. And you could be wrong on market direction and still produce profitable trades. Like you could just be dead wrong. And I'm telling you, you need this in your life because this marketplace right now is going to get crazy. It's going to get crazy. You're going to need something if you're wrong. Because I started off today, you're going to have geopolitical risk. You're going to have election risk. You're going to have Fed risk. Oh, Fed risk that's going to be a fun time. Okay. Let's talk about like what the Fed is going to do. I have no idea. And here's the irony. Neither do they. Catapult can potentially bring in significant returns while actually minimizing your risk. And catapults can be done. These trades can be done inside a retirement account. There's always somebody that says, well, my brokerage firm doesn't allow it. Okay. You can do anything you want inside of your retirement accounts now. Anything you want. Because your brokerage firm doesn't do it, though, doesn't exactly make it like, look, your brokerage firm might not let you do stuff. Others do. That's a decision that you're going to have to make, right? So you can actually do these trades inside of retirement accounts. Like no time, no problem. The trade results that we're showing, this is really hands off. They're hands off. You can even use set and forget. One of the best things that I didn't even mention about this MES, okay, you just set an order, what's called GTC. What's GTC? For those of you that have actually been around the business for a while, GTC, good till cancel. You can set that order GTC to buy itself back, right? Literally, you can set it GTC, right? That's great. A fraction of your time is enough to see significant results. In catapults, we provide real-time trade alerts. I'm not here just, let's just talk about this. Let's just talk about this, okay? When I trade, you get to see everything we do. When I trade, you get to see everything that I do. The trades that are in, okay, this portfolio, this is not just, it's me trading it, okay? The second I actually do the trade, we can text and email them out in real time. You don't have to be sitting there in front of the computer. Oh, you sent a text. You sent a text, okay? Yeah, probably 24 hours, like to basically place the trade or not place the trade. These are pretty hands off. Right? We provide real-time trade alerts to make it hands-off. What better time? If you don't have a time to learn a new skill set, follow our real-time trade alerts. Markets, they may be in bouts of volatility for years to come. Okay? It doesn't matter what you think. It just doesn't matter anymore what we think. What do we know? Okay? I don't know what the future is going to look like right now. That's what I know. Okay? But I'm going to tell you right now, that's why I like being able to take shots and not having to finance them out of pocket. I like to take shots and finance them using those micros. Look, the characteristics of catapults. The attributes of the catapults are undeniable. You never have to buy or sell the stock. Risk is limited. Okay? Risk is limited to precisely your comfort level. As I showed you guys a little bit earlier, inside of that MES, okay, you could dial in how many contracts you wanted to do. Right? You could dial that in. And if you take a look at this in like the open interest, you can see, notice anything interesting, anything that I trade, other people trade too. Okay. That's because we're trading. All right. In here. And we do a lot. We do a lot. That's what some of these alerts are about. You can dial in how much risk. You're never going to use a stop order. We don't use stop orders. Okay. You're going to take moonshots without absorbing that risk. Okay. It's an excellent tool for those seeking returns to build an account. And Catapult, again, can be done in retirement accounts. I constantly hit into the retirement accounts because I can't do this in my account. You absolutely unequivocally can do it into the account, right? Let Catapult alerts do the work for you. Barrier of entry is only $2,000. Let the alerts do that work for you. Look, learn to catapult your trading results. You're going to need catapult trades for the foreseeable market future. And we can show you how and when to use catapults in a matter of a couple of hours. So come learn everything you need to know about options. And I said the O word, okay? Most people, they're not intimidated at all about options, okay? More importantly, Catapult produces real-time, again, trade alerts. Don't be intimidated about the options. All I want you to do, okay, is understand the nuts and bolts, okay? What are we doing? Buying one trade. How are we financing it? By selling another. And if that sounds like a mystery to you, but that's it. We're buying one trade. It's the simplicity of what do you want to do? I want to get bullish in Google. Good. How are you going to finance it? By selling a micro. That's it. From there, it's just logistics. How do you place this trade? How do you place this trade? Once you actually understand how to place both trades, which is termed execute, once you learn how to put the trades in your account, you're ready to roll. Okay. This is what you need to know to successfully catapult to profits. You're going to have to know what underlying stocks or indices make the best catapult candidates. That's what the alerts are for. What micro E-mini S&P 500 options do I sell? I just showed you a minute ago. A lot of options on them. There are options. Look at this. There's 30 days and 35 days and 51 days and 85 days and 86 days, 114 days, 142 days, set, hike. Okay. It's a lot of options on options. We'll dial in exactly which one of these to sell, how many to sell. Okay. What should be the delta of the option I sell? Woo! We're going to get right into the delta, okay, of the option you sell. You go, I don't even know what delta is. It's probability. Okay. What options do I buy against my position and how many? Meaning, like when I set one of these catapults up, I'm going to go out and I'm going to do a trade in Google. Okay. How many of this do I need to finance this? Okay. This and this are two different products. Okay. How do I figure it out? We're going to show you exactly that. How do I build the position? Okay. Do I need a large amount of capital in my account to do this? Absolutely not. I just showed you margin on those micros. The margin on the micro is less than $700. That's the margin side of the position. The other side of the position is the buy. So with $2,000 in your account, you can absolutely do this. What are the percentage returns supposed to be? Like, how do you know when am I supposed to get out? Okay. Let me show you exactly what we do here at STX Options. We create recipes in trading so you can catapult to profits. When I say recipes in trading, I'm talking about step by step criteria. And I got to the point where I just checklist, and go through criteria. Okay, criteria gets me in there. As I was saying, if I was looking here on the chart and I'm looking at expected move, if I'm going through the criteria and I'm going to trade it, well, might as well send out a real-time alert. So not only do we provide recipes in trading so you can catapult to profits, but now we're providing real-time catapult alerts. When trade opportunities arise, I aim to do about one trade a week. Sometimes though, it's like, oh, he didn't do anything this week. And then I do one on Monday, one on Wednesday, one on Friday. Okay. Look, trading's all about answering the what ifs. You're going to have to answer what might be a good stock or ETF candidate for you to catapult to profits. What the correct option expiration cycle do I sell options in? How much capital do I commit to generating catapults? And more importantly, if I have a $10,000 account, a $20,000 account, a $30,000 account, a $150,000 account, how much money do I commit? Okay, to each strategy, to each individual trade. What strike options do I buy? What strike options do I sell? How can I limit my risk? Catapult has your answers and trade alerts. So we build these recipes with very definitive criteria. They're checklists for each strategy and each unique variable that you're going to encounter. Okay. Now, when I talk about that, it's like, if you hopped into the cockpit of a 737, okay, you don't like scream, they go, put your seatbelt, let's go, and just throttle up. Okay. Well, let's go through a highly detailed checklist. That's how we've always approached trading. Always approach trading. We go through a checklist, obviously identifying a ticker, okay, which is going to be your moonshot trade. There's more than just a moonshot trade. You're identifying a ticker, looking at things like what? The expected move indicator. You're looking at a ticker that's going to have to be one of the most liquid products out there because you want something that drives markets, right? We'll actually take you through that entire checklist. And I say, we'll take you through it. Okay. It's as easy as, oh, it came to me on alert. Don's doing a trade on Google. Done. Buy the Google trade, sell the MES. Okay. We take it a step beyond. If I'm running criteria and I'm actually going to put the trades on, we'll send out an alert. Welcome to Catapult Alerts. Look, Catapult is the answer to your questions. We'll give you the right probability of the trade. We'll give you how many option contracts for your account size. When do I close the Catapult? What if we sell off big? When do I bail out of a trade? Good, bad, or indifferent? What if we rally massively? Can I fix a losing position? It's about how, it's about when, it's about why, it's about what price. And I'm telling you, it is just the beginning of the variables you're going to face while catapulting to profits. Look, you can read what catapults are. There's tons of literature out there. You can Google stuff. I use Chat GPT. You can read what catapults are. You might even know how to build a couple of trades. You could probably build a couple of trades off of what you saw. Nothing comes close to the power of the catapult. Nothing comes close to the power of the criteria that we've assembled. You need catapult alerts. This is 25 plus years of trading experience. That's just me. I had access to client order flow for 15 years. I viewed and studied millions of trading accounts. I ran education at both Thinkorswim and TD Ameritrade for over 15 years. We had the largest option order flow in the entire industry. That's where these pieces of criteria come from. Catapult alerts is your recipe for success. We spent literal years fine-tuning this trade setup, fine-tuning the criteria. And now, for the first time, real-time alerts on the convenience of any mobile device. This is Catapult alerts. I am the trader, okay? I am the trader, meaning that when an alert comes out, it is from me. Now, Catapult alerts, okay? We don't just, here's alerts, and give you a pat and get you out of here, okay? We give you Catapult trades. There's going to be about one trade a week. We'll come back to that in a second. Now, Catapult to Profits. There is a 5-week mastermind. I put together a full 5-week course. You can watch it now at your leisure. You can watch it at your leisure. What we basically did is recorded it. People preferred on demand. What's on demand? That's basically you sitting by your lonesome. By the way, you can even listen to it sped up. So you can go like 2 times the speed. I sound like a chipmunk, but I always kind of sound like a chipmunk, right? Now, we give you another kicker. We also do, okay, a 5-week trader by your side. That starts July 2nd. Yeah, you thought you were going on vacation? No soup for you. Okay, July 2nd. We're kicking off Trader by Your Side. What is it? Brandon Chapman with myself. I'll be on there too. All right, 5-week Trader by Your Side. What we actually do is we get you into the mastermind. You get to watch that at your leisure. The Trader by Your Side is another 5-week mastermind. It's another 5-week mastermind. Why? Because the 5-week mastermind that is recorded, that's teaching you catapults. Like that's the class. The 5-week Trader by Your Side, okay, is answering all the nuances, the details of the trade. Okay, some people, is this recorded? It is recorded. If you can't make it live, by the way, it starts July 2nd. I want to let you guys know. It starts at 11 a.m. July 2nd. Now, weekly trade ideas. We're going to give you 52 trades a year. What do you think we do for the first 5 weeks, Trader by Your Side? Okay, we just walk you through the trades. Got to make sure for 5 weeks, we're going to be like, are you comfortable? Are you good? Are you in this trade? Let's get through some questions. Okay, this is a trade that we opened. This is another trade we opened. Here's one that we opened. Oh, we closed it. By week 4, we'll already be closing some trades. The weekly trade ideas will be sent to you via text. You can't see that. Via text and email notification. The trade alerts are for 12 months. You get a full year. It's stxoptions.com/cat. It's $19.97. Okay. It's a pretty spectacular deal because it works out to a couple of bucks per trade. And I got to tell you, we kicked this portfolio off and we have just hit it and hit it and hit it. The trade results have been phenomenal right now. Why? What's driving market? Tech. Okay. What's driving market? Tech. I'll remind you. What have I been trading? I did a Boeing and did financials, but QQQ. Okay. Home run. Microsoft. It's kind of a home run in here. Google. Okay. Did very, very well. NVIDIA. Okay. Again, more Microsoft in here and now a Tesla trade. So you can see literally what's in the portfolio right now. You're like, how come you only have 3 trades in the portfolio right now? Because I've been closing them. I've been closing. You close them profitably. Look at this. Google now. Okay. Up over 70%. Ooh-wee. We're getting close on that one. All right. It's $19.97. I want to go through everything. Okay, that's included in here. So give me just a second. Now, it's stxoptions.com/cat. Again, stxoptions.com/cat. And I'm actually going to take you guys over, okay, to that site briefly, right? I'll discuss this. Now, there's a phone number on the top. If you're welcome to call us, 623-244-5657. I'm going to go through everything that's actually included in here, okay, including, all right, there's absolutely no risk to you. And I just throw that out there right now. There is a 90-day money-back guarantee. I'll go through all of the details of it. Here's the bottom line. There's 90 days. You can check it out. You can go through. By the way, in 90 days, you can go through the 5-week mastermind, right? That's recorded. You can actually listen to that this weekend. You can actually go through the 5-week Trader by Your Side. That's a lot less than 90 days. It starts July 2nd. That literally starts next week, okay? All of the sessions are recorded. Every spoken word here is going to be recorded. The weekly trade ideas, you're checking them out for 90 days. If it's not for you at any point, look, it's 1997. We only want people that want to be here. If something's not for you, look, we have no stipulations on a money back guarantee, period. There's no if and or but about it. You don't have to call us. You don't have to give blood to get out of this. Just shoot us an email, stxoptions.com. Okay. We give your money back. It's 1997. Okay. But let me explain everything that's actually included in here. So first, catapult alerts, right? You're going to get to watch me discuss trades like never before. So catapult trade ideas predominantly on a weekly basis. Now it's a no holds barred trading approach. You can see everything we do. It's full disclosure on all trades, opening, closing, hedging positions, all accounts, margin, IRA, account size is welcome. The minimum is $2,000. If somebody immediately goes, look, if I have a $2,000 account and I pay $2,000, okay, well, at least for that, you're going to learn something. And when you do have more capital in there, okay, it can be a really profitable experience. I don't mind saying that. You can have a $5,000 account, though, might be worth your while because almost everybody that's been in this program, okay, has had more success than, the 1997 in just the last couple of weeks. Obviously, it depends on how many contracts you're trading. Some people are doing one contract. Some people are doing 10 contracts. Somebody the other day doing 100 contracts inside one of these positions and using the big ES, okay? I think they'll probably tell you that 1997 felt like next to nothing. So you get access to the portfolio. And people are like, well, what does that portfolio look like? Let's actually talk about that. Okay, this is STX options. So in STX options, this is a start here. It shows you actually how to do the catapult trades. These are the sessions I was talking about. Okay, these are actually the sessions I was talking about, and I actually walk you through details, okay, of everything. So the trade is working. If it's not filling, watch. I'm going to. All of this, okay, is recorded. You watch it at your own convenience in here. As I said, you can speed it up, you can slow it down. All right, you can watch it in different resolutions. It is a party, people. I think you guys will love it. Also, all of the portfolios are in here as well. All of your portfolios are in there. It's ready to go. All right, the first bonus is, okay, the 5-week catapult mastermind. That's what I was just showing you. That alone is a $2,000 value. So it's 5 weeks, okay? And in fact, what I was just showing you literally is, this is week 1. This is week 2. This is week 3. This is week 4. Okay. And by the way, we actually composite. One of these is actually tied to the other one in here. So we actually take you through a 5-week catapult mastermind. All right. Logic and formula behind catapult, step-by-step criteria. We go through all of it. Right. And it's a small group learning environment. And all sessions, okay, have been recorded. They're archived. It's a $2,000 value. It is ready to go. Now, the second bonus in here is the micro options revolution. So one of the things people are not really familiar with is this micro E-mini. So I put together an entire class specifically on the micro. If you've never traded a micro, you know nothing, okay, about what micros are. We'll give you all the ins and outs on that. Okay, it's a very introductory course, but it's how micros are instrumental to catapult trades and why micros, they'll just change the way you view markets. You're going to uncover how to use them in a lot of different trades. It's not just for catapults. You guys are going to love this product. Okay. I know I put a value of $297 on this. I think it's going to be worth a lot more to you because you're actually going to learn the micros. By the way, they have no day trading rules in micros. They have nominal margin in micros. You guys are going to love this little mini class we put together in here. Now, bonus number 3. Okay, this is a 5-week catapult mastermind. The 2 of us are actually going to put in here. So Brandon Chapman and myself, okay, he's also an industry expert, specifically with catapults. By the way, I've worked with Brandon for, it's almost 20 years now. It's full Q&A session, skill building, supportive community. We're going to take you through 5 weeks. This starts July 2nd, 11 a.m. Okay, July 2nd, 11 a.m. Again, this is a $1,000 value. So sit down, get ready. I know it's starting July 2nd. It's right around the corner. Okay. Why do we do that? Because, well, it's starting July 2nd. Okay. We're doing it because it's coming. Now, bonus number 4, monthly catapult live alerts. This is me on a call with you once a month. I just did one actually yesterday. So you're going to get to join me live every single month. I'll probably spend about 90 minutes with you. We're talking about upcoming catapult opportunities, updates, and details. So every month we get together, okay, and we go back and forth. This is a trade I opened. This is why I closed it, and giving you every insight, every nuance to it, okay, of each of the trades that I selected, and it's ongoing management of catapults. This is actually a $3,000 value. These are spectacular sessions. I've had more positive feedback about the 90-minute sessions than almost any portion of it. Obviously, people are here for the alerts. Like, I get it. You're there for the alerts. But these monthly calls and the amount of insight to them, the monthly calls are always held towards the end of any month. As I said, I just did one literally yesterday. Yesterday was the 25th. It's actually why I kind of closed a trade, opened a trade. I was trading while live on this monthly Catapult Live Alerts review. Okay. It's probably one of my favorite things to do as well, because we've got 90 minutes to basically go through all the trades that we're in, all the trades I'm thinking about. Look, Catapult Alerts. It includes the Catapult trades, which is going to be about 52 trades a year. It's got Trader by your side. That's Brandon and myself literally walking you through the first 5 weeks. It's got the full mastermind. Okay. I don't want to forget, it also has the micro options revolution. Okay. You're going to get text and email notification for 12 months in the trades, and it's $19.97. It's $19.97, which is, again, it's a negligible fee per trade when you break it down over 52 weeks. All right. Onward in here. Look, Catapult is a completely riskless trade. There's a money back guarantee, right? If you are not satisfied at any point, okay, just shoot us an email, support@stxoptions.com. By the way, somebody was asking about the web address. It's stxoptions.com/, okay, C as in cat, A as in cat. No, C as in cat, A as in apple, T as in Tom. So it's stxoptions.com/cat, like catapult. Look, as I was saying, there's a money back guarantee. There are no stipulations. Okay. But you don't need stipulations. This is not like a gym membership. By the way, there's no reoccurring fees in here. It's $19.97. And I always say this about the money back guarantee. The bottom line, okay? We want people that want to be here. We want people, okay, that look, there's no excuses, no questions, no commentary needed. If you email us and ask for your money back, that's okay. Like, I get it. Life sometimes gets in the way, and it's summer, okay? But actually, one of the reasons we're doing this right now, I think summer's actually going to pick up. Pretty stoked about it. And, we put this catapult session together here almost like last minute, because there's just so many opportunities right now for the trade. Okay, coming around summer into the election, and so this is going to get good. It's going to get really good, because this is the time. Like, you guys got to understand, you want to take moonshots right now. You got to be thinking like a little longer term out there. I'm not talking what's right here. I'm talking what's out like 3 months from now. Okay, take the shot, people. Take the shot. It's important. So the money back guarantee, it's critical to me. Look, you can take the class. You can look at the 5-week mentorship, make sure it's for you. All right. Check out some of the trades, place some of the trades. If it's not for you, look, it's $19.97. I'll still love you. It's okay. Like, seriously, it's okay. It's only $19.97 for it. The way, if you need us, call us. Some people said, like, hey, do I have to pay the whole $19.97 up front? We can work out something. So you can call the account rep 623. It's actually a Phoenix number. It's 623-244-5657. Again, 623-244, okay, 5657. There's some people that, like, I get it. They don't like to do stuff online, and I get it, right? Anyway, if you follow me to this page right now, okay, follow me to this page, stxoptions.com/cat. Okay, everything is listed right here. The Catapult Alerts, 5-week mastermind. Okay, that's all recorded. The micro options revolution. Okay, the trader by your side, which is Brandon and myself. Okay, then we have the monthly Catapult Alerts. Again, I put a huge amount of value specifically into that monthly call. People talk about that monthly call constantly. Additionally, if you want to download, okay, my latest watch list of all the moonshot stocks, it's right here on this page. Again, stxoptions.com/cat. As you scroll down in here, a couple things I want to give you a heads up on. Number one, put your name in. Now, the real thing in here, put a valid email address. A valid email address. We're emailing you trades. The email address in here, you could change it down the road, but the email address initially in here, sorry, I'm reading all the questions in here, okay? The email address in here okay, is the one we send the emails to. Also, a valid phone number, because this is where you're going to get text messages. I've actually had people go, I don't even have a smartphone. All right, but you still have email. But anyway, okay. It is 2024. It's okay to have a phone, people. It's okay to have a phone. Anyway, doesn't matter, Android, whatever. You're fine. Anyway, we'll text message you, put a valid number in here. As I said, people were asking about, the money. Okay, you can even add a second year of Catapult in here if you so choose right now for half the price. So due today is 1997. Again, if you have any problem, okay, you're looking for like payment or something like that, where you only put like $1,000 down, just give them a call. 623-244-5657. All right, onward from here. So if you're serious about trading, TheoTrade is by far the best resource out there. Okay, if you can't make dollars, you're not paying attention. They have a hands-off approach to trading, as well if you really don't want to learn to trade on your own. That's exactly what we're doing right now. That's what STX Options is. It's the hands-off approach. Their instructors are the best in the business. Again, the Catapult alerts. Okay, Catapult alerts come to the convenience of your mobile device. Okay, trades look like this, right? And you're like, oh, I don't get it. Okay, it's not that bad. All right, get ready for text messages. We use a 602 number. Okay, we do text messaging, and or we send via email. And that's important. People look, okay, we send out emails too. So we started doing both because some people like, look, text messaging, it's not perfect. I'm honest. It's not perfect. Text messaging has never been perfect. Email will get you. Oh, emails are slow. The one thing I always try to tell people though, you got about 24 hours. Like you got to get the trade on. There's times where you might miss a trade, but here's the bottom line. Just time out for a second. No one has to do 52 trades a year. Okay. Do a trade here, do a trade there. To your liking. I'm going to do some big trades, some small trades, some really small trades, some really big trades. Okay. I mix it up a little bit. It's okay. Just get ready for text messaging. Now, get in a Catapult now. We're going to work with you. Okay. Look, we give 30 spots on the Catapult riskless deal. And I don't mind saying we do that to incentivize you to enroll today. It's 1997 and it has a riskless offer associated with it. And again, we incentivize people. By the way, those of you that are enrolling, I'm just going to read off. I see names populating in here. Okay. So I'm going to read a couple of those names off here momentarily. It's Mike B from North Carolina, Leo B from New York, Igor V from New Jersey, Mike C from Massachusetts, Sean D from Georgia, John C from North Carolina, a couple of people in here from North Carolina, Joseph O from Pennsylvania. By the way, it takes me, okay, about 5 minutes, almost 7 minutes even, for me to see your name finally populate in here. I'm reading off those names. Okay, we see you have enrolled. You'll get access almost immediately here to stxoptions.com. You'll be able to actually go through, start to review some of the materials. I think you guys are really like, I mean, never had anybody say like the materials in here, okay, are
This is
we really put a
this
lot of
happens to be
time,
an ETF,
a lot of
but it
effort
still belongs, if you will, to the
okay,
equity.
to getting these things spot on. We really have refined a lot of the videos in here. This one's about, Catapult allocation and margin, okay, details, and more details for you. Anyway, with that, I'm reading off a couple of names as they're populating in here. Again, just so we see you guys enrolling right now, and thank you for doing so. stxoptions.com/cat. Now I'm going to answer some specific questions here in just a moment. Before I do, I'm just going to answer some generalized questions. By the way, Alvin H from California, just seeing some enrollments actually come through right now. So yeah, Alvin H from California. Okay. This is actually an email that came for you. It said 10-4, Dom. Okay. You know what's in your extended family? TheoTrade. Okay, I'm not flattering you. I keep reiterating that your assembly of talent in the organization is impressive. The collective drive to continue to learn, okay, and to share what you learn is quite unique in the particular business you're in. That's why I keep coming back. Maybe Wells comes from Fred. We're always driving forward, always on the cutting edge of what can be done inside of trading over here. There was another question again. It's stxoptions.com/cat. And the link to that is actually located right here. You can actually see the link right directly above that screen in there. All right, onward and upward. here's some generalized questions I want to answer for you. Okay. And then we'll get into some specifics over here in there. I like what somebody said. Have you been to Buck Island yet? I could swim to Buck Island from where I am right now. And the answer is yes. Yes, I have. I can see it from my view right there. So it's a nice thing about the office here in the Virgin Islands is I'm on the water. Okay, it's nice. Look, questions answered. People always ask me, what do you need to get started? I used to say you need a laptop and internet connection. Quite frankly, need any mobile device. Okay, the mobile devices these days, okay, are good enough to where okay, and I really mean this, any type of trade can be placed directly in here. In fact, um, I will definitely make a statement. People, look, I am very what I would term broker agnostic, meaning that I'll trade on Thinkorswim, I'll trade on Tasty, but I got to tell you something. Tasty, when it comes to mobile, okay, it's good. The Tasty iPad application, I don't have my iPad sitting here. Ugh! The Tasty iPad and Android application is unbelievable. Like their tablet application is as good as their desktop. By far, it's the best in the industry, okay, for mobile trading. The cool thing is here, by the way, people always ask me, oh, I have to buy this, or I have to buy. No, don't buy anything. When it comes to like an iPad, I use the Walmart $299 iPad. Okay. I don't have like exactly like the most special phone. Okay. I have the 3 camera phone that who cares? Right. None of that crap matters. You know what? My kids actually use one of my really old iPhones. I think it's like an iPhone like X or something. And you can still run all the different mobile applications, everything on it. It's fine. It's absolutely fine. So if your phone is 5 or 6 years old, you're good. It's not going to make a difference over there. Anyway, so we have everything you need to get started. And I am so adamant about this. If there is something you need in this business, okay, to get a leg up, to get started, shoot us an email. Let me know. Okay. Let us know. That's important. If we're not, there's something that you think that we need to provide to really give you a leg up, especially trading like something like catapults, I want to know about it. And I'm deadly serious about that. Okay. We're now providing STX options monthly live updates. You can follow all the moves we make. That is the monthly call. And there's not too many things I look forward to, but I do like doing the monthly live call. And I like it because this is actually where we finally get to interact. Okay. Once a month, trades that you've done, trades you're thinking about doing. All right. We can actually walk through some of the trade ideas are yours, some of the trade ideas are mine. We get to interact a lot in there. You guys will love, absolutely love, okay, that those live updates. By the way, a few more names. Edison A from West Virginia, Bonnie H from Colorado, Alan K from Singapore. Okay, welcome, Alan K from Singapore. All right, I think you win for the furthest distance away from us. Okay, and it's late there right now, very late, or should I say, very very early. You're all the way on the other side. I think about 12 hours difference than me. All right, catapult. Okay, will aim to provide an average of 1 trade, okay, per week. Obviously subject to market conditions. One of the ways that I actually trade, though, sometimes I may not do something for a week and then I'll do 2 trades or even 3 trades the week after. Just goes like that. Markets get flat, nothing's going on. Okay. I have to use market conditions. I just do. Okay. And the trades that I'm doing can be placed within a 24-hour time window. So there's not a reason to be like chained to the computer, chained to the phone. I've literally had people tell me, they're like, I was on the highway and I was driving and I had to pull over to be able to place the trade. Please, you don't need to do that. Okay. You absolutely do not need to do that. So, trying to read some of the questions in here. By the way, somebody said, I see trades can be placed within a 24-hour window. Do all the catapult trades move the market? So no, these trades, like none of the products that I'm going to trade, when I see something like Google or Apple or Tesla, even with the size that we're putting on, we're not going to move markets. We will not move markets. I mean, you can move some stocks by a few pennies here and there, but you're not going to move markets. Some of the trades that we are doing right now, I don't mind saying, they're of size. Like we might see 5,000 contracts come through in one of the trades that we do now from time to time between Theo Trade and STX options. We will do 5,000 contracts, and that's not combined, that's per leg on some of this. So that's important. Now, number 5 over here, you can email us anytime, receive a response within 24 hours, including trade related questions. So email us. Email, okay, is a great way, obviously, to communicate. You can email us. When I say trade related questions, look, you don't have to come in here and say, it's my dog's sister, like that, roommate has a question about a supposed trade. Just come in here and ask us the question. Okay. Most of us here, right, have held many, many licenses over many, many years in the brokerage side of the business. So we know how to answer trade related questions, right? It's so important. Okay, look, people, this is the stuff that you want to learn in this business. People do some crazy stuff in the markets, crazy stuff in the markets. This isn't crazy. This is clean, okay, and as simplistic as possible. This is what big firms are doing, but we're taking it to a micro kind of stance over here. Now, variations of the trades can be available inside of an IRA retirement account, and you can do this with as little as $2,000 in an account. STX options can help you get approved for options trading at several major brokers. Remember, there are 30 riskless spots available. Now, we do that specifically to incentivize you, okay? To incentivize you. Obviously, there's 30 spots, okay? And we're through pretty good majority of those spots. Look, get results, take action, enroll for Catapult now. There's no risk in enrolling for Catapult. All right, onward and upward over here. I'm just going to pop this in here and answer a couple more specific questions over here. All right. So, by the way, somebody else was asking about on the page over here. Okay, if you want to download some of the slide deck, that's also available. Again, it's right on the page, stxoptions.com/cat. Okay, cool. So it's July 2nd. 11 a.m. Okay, July 2nd, 11 a.m. And it's a good question. I think it's 11 a.m. Pacific time. Okay, you know what? I'm gonna clarify that one right now. Okay, because they're setting up my life for me over here. Okay. All right. By the way, it's 11 a.m. Eastern time. I got the answer to you. It's 11 a.m. Eastern time. So Bonnie, I got you over there. So James G from New Jersey, just seeing your enrollment come through right now. So Bonnie, I said Bonnie H from Colorado. Okay. Not only did I answer your question, but I also see your enrollment actually coming through as I say that over here. Interesting. Okay. So yeah, we'll put that in there. So it is 11 a.m. Eastern time, which makes quite a bit of sense over here. All right. So with that, again, if you guys need to get a hold of us right now, it's 623-244-5657. I'm going to answer a couple of more questions in here. I want to thank everybody for tuning in over here. All right. A couple other people. Let me see if there's anything else that I want to grab over here while I'm still live. Tell you what, I'm going to sit in here for the next couple of minutes. I'm actually going to type a few answers to you. Okay. If there's questions, feel free, shoot them in over here, stxoptions.com/cat. Thank you everybody for joining us. Those of you that are live today, phenomenal. And have a good afternoon, everybody. Bye-bye.